If the housing market crashes in 2026, we're all going to be screwed. Or it may be completely fine.
In terms of where real estate values are falling the most, two states are taking the lead, with that being Florida and Texas. As Business Insider reported, both states have been building more homes than any other part of the U.S. in a race to make room for pandemic-era newcomers.
So Graham Stephan says, basically he's talking about something called the 18-year cycle, which I love this theory that every 18 years we have a downfall in home prices, right? And the thought process is then 2026, we're going to have a recession and home prices are going to drop, right? I think the only thing that's changing that right now is the fact that COVID changed how current homeowners and potential homeowners value their home, right? Their space, their amenities at home. It may be true that in 2 years that home prices do decrease, but I don't think we're going to see what happened in the previous 18-year cycles. One of them being 2007, 2008, where we had a complete crash. The issue with 07, 08 was that banks were lending a ton of money. Right now, even through COVID, everything's been somewhat consistent. They never lent more or lent less.
The states that saw the largest pandemic boom were also the same areas that saw the most development, most price growth, and most oversaturation, to the point where now they're no longer the most cost-effective and are no longer the most attractive.
In Texas and Florida, where home prices were peaking during COVID, really from 2020 to 2022, and now supply is outweighing demand, and those home prices are falling in Texas and Florida, and states similar that were really popular during COVID. Now they're not so much, right? And builders are not focusing the way they used to be hyper-focused in those states to build and make more room for pandemic movers.
Realtor.com reported on the 11 markets that are seeing the largest decline so far in the United States. And at the top of the list is Miami, with an 11.2% drop year over year. Denver came in with a 6.3% drop. Seattle at 5.5%, Kansas City at 4.9%, Oklahoma City at 4.3%, and San Jose at 4%.
There's a bunch of states in there that pop up as far as like Oklahoma, Kansas City, Miami, Tennessee. Those states is kind of funny because, you know, I see Tennessee is an extremely hot market right now, but I think it's overinflated. But Miami being over 11% decrease in home prices, that's kind of crazy.
When it comes to falling prices, there's another more sinister aspect to consider, and that's a term called shrinkflation. Yep, you heard that correctly. The same term that usually refers to foods and products suspiciously getting smaller over time while remaining the same price has now officially made it to the housing market.
In a nutshell, what that is that a lot of people are looking for smaller homes to basically be a little more cost effective, right? And have things cost less because inflation is so crippling right now. That, although it is true, may not necessarily be the case depending on where you kind of stand and where you live in the country, right? Where your income level is and what amenities you need for your family and where you currently reside. So I could tell you that even though Manhattan is officially in a buyer's market, and a lot of people say this in Manhattan because volume has increased, if you go an hour north of Manhattan to Putnam or Dutchess County in New York, you'll see that volume is flying off the shelves, right? There are not enough houses to satisfy buyers. And what's happening is we're still seeing in Westchester, Putnam, Dutchess, and even northern counties, these bidding wars on well-priced and well-cared-for homes. If it is not well cared for, you do have prices a little lower, but typically it requires a ton of renovation. So the shrinkflation model is basically saying that people are buying less because inflation is crippling them and they want smaller homes to live in. There are also a lot of consumers, by working with professionals, are figuring out that they may not need a dining room that they use once a year. They may not need 4 bedrooms. They could get away with 3. You know, and that's going to save you money, not only on the price of the home, your mortgage, but also your taxes, right? So this is something to think about. The 18-year, I mean, I don't know if 2026 is going to have a crash in house prices. I hope it does, because one thing that you guys always have to keep in mind, whenever there's a stock market crash or any type of real estate crash, people get rich. So if that does happen, make sure you have money on the sideline and you invest immediately and thank me later.